Welcome to Newspresso. Here is the top story in the past 6 hours. The stock market spent a week like a roller coaster. It was a windy day. After a calm week in late October, investors stared. They were staring at two headline questions. The answers seemed to appear on Thursday morning, only to make everyone wonder what they meant. Nvidia posted a jaw-dropping earnings statement. Numbers were hot, investors felt brief fear. The bubble burst faded. Then, the US jobs report hit the market, like a surprise knock on the door. Instead of showing steady growth, it told a more confusing story. The unemployment rate had risen, but that could mean people were re-entering the workforce after a summer pause. Traders who had been hoping for a clear sign of economic weakness that would force the Fed to cut rates suddenly faced two new puzzles. Can Nvidia sustain such high growth? And how will the Fed react if jobs look stronger than expected? The reaction was a quick surge. The Dow jumped more than 700 points Thursday. 100 rose. The Nasdaq followed suit. But by mid-morning, the excitement had cooled. The market turned negative. By the close, the Dow had lost almost 400 points, slipped 1.6%. The Nasdaq tumbled over 2%. Nvidia slipped 3% despite an earlier rally. Bitcoin, which had spiked past 92,000, fell back. It was around 86. The market's big dip was the biggest. It was since the tariff turmoil in April. The S&P 500 was down more than 5%. It was from its all-time high. Friday felt like a reset button. Traders breathed a sigh of relief. New York Federal Reserve President John Williams said he was open. He was open to lowering rates. That single sentence nudged the Dow up 493 points. 100 gained nearly 1%, 0.88%. The boost did not come from Nvidia's earnings. Those had settled into a flat line by Friday, 2%. It had not seen a level that low since April. While the VIX, the Volatility Index, spiked to 27. It was the first time since last month. The current market volatility is still high, though in the longer term the market has been recovering. In addition, the Treasury market has remained stable, and a 30-year Treasury yield at a 0.2% level is still relatively cheap compared with previous lows. The 10-year Treasury yield was 4.45% a day ago and 4.60% today, while the 5-year Treasury yield was 4.5% a day ago and 4.61% today. The 30-year Treasury yield is currently 4.30%. The market is showing a trend toward a shift toward a more procyclical bias in the economy, and it has been linked to a rise in stock prices. In addition, the market has a strong bias toward a procyclical market. The data show a growing trend toward a shift toward a more procyclical bias in the economy, and it has been linked to a rise in stock prices. Meanwhile, the Fear and Greed Index, CNN's barometer, dropped into extreme fear territory, its lowest level since April. Investors can expect volatility to stick around. The economy's health and Fed stance remain murky. In short, volatility shows a week of uncertainty, waiting signals from economic data and makers. Subscribe Newspresso. Never miss a major global headline.